Hello, everyone. Welcome to our last This Week in Crypto of October 2022 here. Things have looked pretty good for the markets for a change here. We've had so many red weeks to report over the last few months that it's very refreshing to be able to open with a screen that looks so green like this. And what we're going to be doing today is really figure out why, talk about the price and social dominance of assets like Dogecoin and Ethereum, uh, figure out exactly what's going on, why crypto has been able to rebound a bit here despite equities staying fairly flat, and try to answer some of your questions as usual so we can look into some assets that may not be getting as much love as maybe you think they deserve. We like to always dig into new projects. So if you have something, whether it's a large, medium, or small cap, for us to look through, we'd be happy to do so. And thank you all for joining. As always, we appreciate you spreading the word, letting others know about our fundamental analysis and the on-chain and social metrics that we provide. And remember, of course, that our goal is to not give investment advice, but to give as much data as we possibly can to help you as a pro member who needs help interpreting our metrics, or a non-pro member who's trying to figure out whether Santiment's data is worth the time, which of course we believe it is. So with that said, why don't we look through the numbers a little bit and look through some of the highlights in terms of projects with some nice returns over the past week. You can see that the vast majority of assets here on our screener are in the positive over the past week. Really, the big story is Ethereum. And even though there's roughly, I don't know, 5 to 10 projects here that were as good of returners or better than Ethereum, obviously when Ethereum is seeing a major price dominance over Bitcoin like it has, it's going to get a lot of the headlines. And of course, it broke out of a range that it had been stuck in for the past 6 weeks or so, got all the way up to 1589. It's in the 1540s as we speak and could be dancing above or below that at any given moment because volatility is very high. But for now, Ethereum has gained 20% over the past week, and that is an impressive feat. Being in the mid 1500s, people have warmed up to it. There's been a lot more bullishness, and we actually put up a poll that I wanted to show to ask people, what asset do you think will see the highest percentage gain between now and the end of the year? And overwhelmingly, the answer is Ethereum. And that's a nice change because a couple months ago, we were asking very similar questions, asking, what'll happen first, Bitcoin breaking back above 30K, Ethereum back above 2K, or Bitcoin going below 10K, Ethereum below like 800 or so. And most people thought Ethereum would be falling below 800 because it had been getting absolutely hammered since dropping from its all-time high just about 1 year ago, getting to as high as about just under 4,900, I believe it was. So it's funny how recency bias works, and we talk about this often. Traders are constantly following whatever has been going on lately. It's the mentality of what have you done for me lately that has always kind of churned crypto and led people to make irrational decisions. And it's not to say that Ethereum being the best returner among Bitcoin, Ethereum, Tether, US dollar is a notion that is laughable or could be untrue by any sense. There could be a further rally between now and the end of the year for Ethereum that leaves Bitcoin and obviously stable coins in the dust, meaning there would be a positive return since stable coins and dollar values generally around even. But I can guarantee you that if Bitcoin had had a huge dominance run over the past week, things would probably be flip-flopped between Bitcoin and Ethereum. And that really just goes to show that traders are constantly in a recency bias here. So going back to our screener, obviously there are plenty of assets that did even better than Ethereum. And I mentioned Doge as one of the leading candidates. Other than Clayton, which congratulations if you've been investing and accumulating heavily into Clayton during this dip, Dogecoin is the next highest return coin among the top 100 assets of crypto by market cap. With a cool 46% gain, it's been getting a lot of traction. And if we jump over to our top 10 sand trends countdown, this will show exactly how much Doge is being talked about compared to other topics in crypto right now. Now, in case you don't know how this page works, this is the top 10 hourly trends and shows us the top 10 keywords that are seeing the largest percentage gains versus their normal discussion rates. So obviously, if we were just looking at overall discussion rate, Bitcoin, Ethereum, buy, sell, words like that would be near the top. But from a percentage gain perspective, Doge is being discussed at a much larger frequency than it normally is. And that's why it's number one on our leaderboard at the moment. And you can see very clearly, beginning right around the 27th, it started to get a lot of discussion. Let me switch the price to Doge, and you can clearly see the FOMO spike that started to come in here. And generally, when you see a lot of social volume to a coin that's been rising, it usually leads to at least a temporary correction. We did see one here, and then it quickly fell back down until social volume died down, and then it took off once again just in the last few hours, like 8 to 10 hours. We've been seeing another huge pump, and it's now at the highest price that we've seen since, it looks like, around August 17th or so. And that's obviously pretty significant because most of crypto is still trying to get back to where it was in mid-August. Ethereum is right on the cusp of being in that mid-August level, but most assets are not. So Dogecoin has been clearly in a decoupling phase away from the rest of crypto. I can turn on social dominance here too. So it'll basically ignore time and look at just the percentage of discussions. And actually, there hasn't been a huge spike in social dominance compared to social volume. There was a much bigger one here and here back in August and September, respectively. And you can see how right here, this was right before a price top occurred and prices bottomed out. This one was more of a flat performance for a little while, but eventually it did drop down. I wouldn't be surprised if social volume stays pretty high and we see another spike ensuing right now as things are pumping. Wouldn't be surprised if another local top forms. And you can see that it's been mostly Reddit, actually, that's been seeing the most discussion related to Dogecoin, following the meme coins performance and being very vested in where prices are going next. Telegram, a little bit of a spike. Twitter, not so much discussion. So while we're on social trends, we can also look up a few keywords like buy or buying or bot or bottom or bullish. And we can compare that to sell or selling or sold or top or bearish. Put them on the same axis. And yeah, we can see that the amount of optimism and overall bullishness is starting to pick up a little bit, whereas bearishness is not. Generally, it's better if you see these going up together. That's something we saw back here in mid-August, where both bullishness and bearishness was going up together. Here, we only saw bullishness, tons of people calling for a breakout here in mid-August. And as we know, that was exactly where the local top was, and things started collapsing because there was not enough cynicism, not enough people who were doubting the price being able to go up. So because there was a big gap between the optimistic people and the pessimistic people, that essentially indicated there was too much FOMO. And generally speaking, prices move in the opposite direction of the crowd's expectation. So we saw something similar here, lots of optimism around this bottom. People thought it was the dip buy opportunity we were all waiting for a couple of weeks ago. And what ended up happening is it just stayed flat until the optimism right around here on the 23rd began to get really low. And there wasn't a lot of buy calls at all. And right afterwards, boom, we have this huge, huge breakout. We're of course still looking at Dogecoin, but even still, the same goes for Bitcoin. It did break out a little bit this past week, as we saw. Bitcoin is up 7%, and negative commentary is staying pretty low. So skipping ahead, and I'll jump back, Bitcoin and its sentiment, where we're at now, I'll get to dominance also. We can still see that it's kind of shuffled between slightly positive and now pretty negative once again. But looking at something more like Ethereum, and I haven't checked this ahead of time, but I'm willing to bet that it's become much more positive with this breakout. No, not really. So far, it's actually stayed flat. Now, it isn't negative like it was before, but we're not seeing a huge spike, which is a good sign for Ethereum, and we can get into this more later on the call. But generally, we just want to avoid Ethereum being super positive and euphoric, which would mean that the crowd is starting to FOMO in and anticipate a huge breakout. But for now, that's not yet the case. Moving back to the screener for just a few other topics, we can also see that the amount of discussion related to Bitcoin and Ethereum, they're up mildly, not like massively, no like double the amount of discussion like we've seen on occasion. We do see that there's a ton more discussion related to stable coins, which is interesting. XRP and Cardano, which had been discussed a lot in previous weeks, they're starting to die down. Matic is up, Dogecoin up 44%, which it could be more, but that's still a pretty large breakout. And then the small caps are not getting a lot of love. So it's really stable coins and Dogecoin that are, and a few others like Matic, that are seeing a little bit more discussion, and Bitcoin itself, actually, even more so than Ethereum. If we did just the last 24 hours, it's actually died down. So there's still just not that much overall discussion in crypto, even with a pretty positive week that we just saw. And if we type in just an asterisk here, we can see the overall amount of discussion on crypto platforms. It is higher than it's been pretty much in 3 months. You can see the rise that's going on here. Going back to a year though, there's still some catching up to do. So it really was peaking, I guess, all the way back here around the all-time highs, which makes sense. And as the price was dropping, there was less and less and less discussion. Started to pick up as price. It's funny how the amount of discussion kind of lags behind price a little. So if there's a price outbreak, you start to see more and more discussion until we hit a top, then it goes back down again. You can really see how between April and July, there's a big drop in overall interest in crypto as many traders' hearts were getting broken around here. And then you can see since early August, there has been a gradual rise again. It's just not quite back to where we were around the all-time highs. So keep a close eye on that. You can really see that Telegram is one of the big reasons. Telegram really takes advantage of a lot of FOMO in traders' minds, when people are most optimistic. That's when you see a lot of coins being shilled, of course, scams being attempted on these euphoric traders. And they've been pretty non-existent for now. Reddit has been flat, and really Twitter has been the one that's starting to show a little more momentum. Of course, somewhat related news, but Elon Musk has taken over Twitter officially. It's been a long time coming. We've been hearing about it all year long. So there could be some big changes coming to Twitter, which, at least from what we hear, are going to be changes that allow for more free speech and less censorship, which, at least in my mind, would be a positive for crypto and indicate that there is more room for discussion related to projects that were normally frowned upon or somewhat filtered out by Twitter's algos. So, let's watch closely to see how the final 2 months of 2022 end up going for Twitter in particular, and the amount of discussion related to crypto. We could start to see, Elon's token and Dogecoin really start to take off, because those obviously correlate with Elon Musk being more in the news, especially if he has the power to shill it in a much more free way than he was before. Now, let me take a quick look at our chat and just see how things are going here. Thanks to those who are in the chat with me. Hey, Danny, great to see you once again. Top transactions for Bitcoin just in the past couple of days. We could definitely look at that. I think it's actually worth checking out now because it's been something we were talking about over the last few days with Ethereum, and I think it's very relevant to Bitcoin as well. Let me open a separate page because I still want to look through Doge later on this call. So I'm going to open Bitcoin here, and I'm just going to type in top transactions. And by the way, thank you to everyone who's watching on Twitter as well. I know it's tough to tell exactly how many people are watching at any given moment because YouTube's views are the only ones that show, and many more of you kind of watch the stream directly from your feed on Twitter. So thanks for being here. All right, so top transactions over the past month. Let's go by value. And we can see, just as Danny was alluding to, the largest over the past month occurred on October 26th. Now, with Bitcoin's network in particular, we don't really have a way of seeing whether it was on an exchange, whether it's a whale address, but we can open up this address and it'll show the historical value of the address over time. If we go back to the last year, just to see if there were ever assets in here, the answer is no. So this is a brand new wallet that received a total of 51.8K Bitcoin, pretty much just a little over 24 hours ago, it seems. That is, of course, very significant. It might be too difficult to find out what the from address is. Let's see if there's anything here on the Blockchain Explorer. So I think it says here there were 30,000 Bitcoins spent. Open this up really quick just to look at the original address. Yeah, there's a lot of mini transactions going on here, so it might be a little too tough to get into the weeds. But we can at least say with certainty that the largest transaction was to this brand new address that occurred on the 26th, and it wasn't alone. Check it out. 4 of the top 5 addresses, top 5 largest transactions, I should say, all occurred in the last couple of days. Let's take a look at the next one. And by the way, no, all 4 of these are different. I was going to say there might be one that's in common, but all 4 of these addresses are different. So taking a look at another address. So this one historically has had its share of movement. And it's been a lot over the past year. So it was only at about 5,000 Bitcoin a year ago, ended up spiking, got all the way up to 75K, started dropping back down, had a big buy, huge buy here in mid-June, got all the way up to 151K Bitcoin before a big drop right away, and then another big buy, and this is what's showing up on the top transactions table just 2 days ago, and is now back up to 36K in Bitcoin held. Let's take a look at the next one. At the last year. So this one it was basically a brand new address, temporarily held Bitcoin, and then dropped it all again. So this was, I think, the one, it could have been related to this transaction, like some sort of transaction that went from this address to this address, considering they were at the exact same time, this one, and this one. So this is really interesting. And one thing I want to do in the future is take a look at how the timing of these whale transactions line up with spikes in Bitcoin's price. So like, for example, the 26th and 27th is when we started to really see some breakout to Bitcoin's price, and of course all of crypto's price, and that's when these transactions occurred. So if we lined it up to the hour, we may very well see when some spikes occurred while these whale transactions were in progress. And this last one here was another large accumulation for an address that had never had Bitcoin in it before, nothing in the past year, and then all of a sudden, boom, it's got 23.5K Bitcoin in it. So really interesting stuff here. And, I definitely can look into putting the pieces together and seeing how price performance correlated with a certain address. If you guys ever have requests on different addresses for us to do more detailed studies on, you definitely do so. So thanks for bringing that up, Danny. Appreciate that. A few other things he said. Did his own wallet analysis, seems very interesting, which is why you wanted us to see it too. Roughly 90K Bitcoin moved in the past 2 days. Also, jump trading has been setting Ethereum to exchanges nonstop since the local top. Only one seems like a whale. Let's take a look really quick while we're here. Let's take a look at Ethereum as well, because now we can actually look at the from and the to addresses, and we have some labeling on what these addresses were. Okay, so looking at the largest transactions for Ethereum over the past month, we can see there was a send of 230K, roughly, Ethereum. And it was a very, very short-lived stay for this Ethereum. 231.9K that went in and then out about a day later. And it went to a whale address, this one here, and it's been sitting here ever since. And once again, it's a brand new address that now just holds 231.8K of Ethereum. Always a good sign when it goes from a unlabeled address to an address that is labeled to be a whale. Next one down, 229K. This one happened back on October 6th. In another case where for roughly 2 weeks, it just sat. There was 219K. It actually went all the way up to 229K. So there was an extra 10K added while it was sitting in this wallet and then emptied. October 11th. Trying to see if there's any recent ones. So it doesn't look like any of the largest happened recently until we get down to here on the 26th and 27th. 93K was moved, 92K was moved. Temporary stay in that address, and then it was moved to this address where it also stayed temporarily. On the 27th, same thing. And this one is where it's sitting since the 27th, yesterday. So yeah, one thing I like to look for are these labels here to see whether it's going from like a centralized exchange trading address to a whale address like this. So here on the 11th, this would be a positive sign, going from a centralized exchange to a known whale address, where it no longer sits, but it at least, oh, I take it back, it actually is in that wallet still. So that would be a good sign. Anything moving to whale addresses, generally good. Whale addresses, as we know, are some of the primary addresses that do pump prices or dump prices at any given moment. So anyways, we'll come back to a little bit of Ethereum analysis. I wanted to make sure we took a look at this, which was kind of the topic of convo for today's call, which we had in the thumbnail and the title. And what's interesting about what's happening with prices right now is we see that Ethereum and Bitcoin to an extent are seeing some pump potential going on. Ethereum being up 20%. It did kind of lag behind the S&P, which obviously didn't go up 20%, but these are all on their own axes. So you can see when the S&P is moving up or down compared to its usual range, and they've moved up pretty well in unison over the past 3 months. But what's happening now, the S&P is actually having kind of a flat day, and Ethereum is seeing another breakout. Especially right here, we could see how Ethereum climbed while the S&P stayed flat. Of course, gold is still kind of not really moving much at all in either direction. But Ethereum and Bitcoin have shown a few signs of being able to break out without its reliance on the S&P, which we've seen throughout the past year here. Look at how the blue line and the green line have stayed in close proximity to one another. And what I find interesting about today and just the last couple of days, let me check really quick just to see okay, so the S&P and NASDAQ, they are starting to climb, but at least for the first hour of equities trading, that was not the case. And Ethereum and crypto in general, we're seeing some nice breakouts. And it looks like still looking pretty good, especially Sushi, Doge, Shiba, Uniswap, Aave, Ethereum, and a few others. So a lot of ERC20s in particular are having some nice breakouts, much more so than the S&P. And the more we see crypto being able to break out without its reliance on the S&P 500 being present, the more we are close to a potential long-term crypto breakout. As we've seen through studies we've done in the past, crypto has broken out best when it does not care what equities are doing. We saw that in 2021 in particular, where there was a lot of mini breakouts during that year without the S&P really having big days. So for now, I mean, we can still say there is a correlation, but watch how the beginning of next week goes, especially with a lot of assets breaking out this past week without really a huge spike in the S&P 500 in tandem with that. Let's take a look at the insight that we just posted yesterday. This is about what's going on with whales versus retail traders right now. And we use this graphic, which we've been talking about internally quite a bit at Santiment. This is the amount, or I should say the market cap of Tether and USD coin combined, two of the largest stable coins, and what it's doing relative to the price. These are the green and red candles. And then the blue line here are the whale holders of Bitcoin. We can see that the 100 to 10,000 Bitcoin addresses have been dropping over time, while the gold line was moving up right up until around early March. And in early March, the market cap started, stablecoin market cap started to shrink once again and go down and down and down. We are starting to see just a tiny little uptick, but we've seen this plenty of times before, plenty of teases, and then it just drops down further. The reason this is significant is because the theory goes whenever Bitcoin whales are dumping, they're likely, moving into stable coins and waiting on the sidelines for a price that is more intriguing to them. But we aren't really seeing, since early April, we aren't really seeing that the dumping of Bitcoin is translating into a larger market cap for Tether and USD coin. Instead, they're both going down together and have been for about 6 months. And when that happens, it makes it harder to justify prices being able to rebound because the whales don't have their assets to buy crypto on basically in crypto. So like right here, when whales were dumping, but stable coins were rising, that meant that at any given moment, they could just add more back into Bitcoin at these lower prices. But with so much FOMC news coming out about interest rates rising, recession news and inflation news coming out constantly, really scaring a lot of traders, it appeared that a lot of people were just more satisfied in getting their money into fiat and moving into US and world treasuries. And that seems to be where a lot of these whale traders' money is right now. It doesn't mean that crypto can't break out because of this, but it means that it's significantly harder while stable coins and Bitcoin are kind of off the table for whales at the moment. There will be a moment where we start to see some rapid accumulation again, and that can be a great sign of a breakout. But for now, it's looking like whales are still showing a lot of disinterest. And we talked about that in this article. I highly recommend you check it out. Shout out to Maxim, our founder, and Maxim T, one of our key developers, for bringing this chart to our attention. We can also see on the topic of Ethereum that the top 10 largest addresses in Ethereum now own over a quarter of the entire supply. And it's been going up and up and up. This isn't necessarily a good or bad thing. You can actually see there's been kind of an inverse correlation with the price over the past year. But it does mean that the very top whales are holding more than they have in a very long time. And that could indicate that there's a little bit of an increase in centralization. A lot of people were fearing that when the merge happened. You can see just how much the accumulation really was evident here right around the merge. But this is some interesting development, and if we really start to see it continue to move up toward 30%, just understand that there's an increased amount of weight that the very largest Ethereum addresses have on where prices move next. And that's more similar to an asset like XRP, Cardano to an extent, and some others. You can also see some of the more whale-esque addresses that are not the very, very top 10 that often include exchange addresses. They've been mostly still moving down since the merge. You can see exactly when the merge happened, right around here. And all of these lines kind of took a dip right afterwards, and have mostly stayed down. You can see the largest one of these four, that's the 100,000 to 1 million Ethereum line. It's starting to show a little bit of a climb, but really nothing significant to break out of this pattern of decreases that have been happening over the past year for the key top holders in Ethereum. So they aren't looking much better than Bitcoin. And for that reason, when we see this breakout, back up to 1589 like we saw a couple days ago, we have to temper our excitement a bit when the whales aren't seeming to show the same optimism as the smaller traders are. And going back to this first line again, when we look at Bitcoin and we talk about those smaller traders, the retail traders that hold anywhere between 0.01 up to 10 Bitcoin, they've climbed to their all-time high recently. They were holding just over 15.9% about a few days ago, I believe. And that essentially means that these whales are dumping to the retail traders. The very small addresses below 0.01, they're staying pretty flat, but the 0.01 to 10 Bitcoin addresses holding almost 16% now. That's never been seen before. We look at 1 year ago, they were holding just about 14%. So it really shows how much the retail traders are continuing to climb, hoping that Bitcoin can rebound while the whales are kind of just sitting there and waiting, if not dumping a little bit, as we continue to see throughout the year. Jump back into chat really quick. Talking about balancer whales stacking WETH like crazy for a month. That's interesting. All right, in the meantime, why don't we take a look at another whale chart really quickly, and that's the 100 to 10,000 Bitcoin whales, which we just looked at, but also this pink line, the overall percentage of Tether held by $100,000 to $10 million addresses. And they have been climbing here since the beginning of August. Generally, these two lines can kind of cancel each other out. If one is going down and one is going up, it generally means that prices can stay pretty flat, which to an extent they have. I need to actually go to the last 3 months. That's better. So we can see how it's been chopping ever since, I guess, ever since late August. So about for 2 months, we've seen this price chopping right below 20K. And Tether whales have been accumulating while Bitcoin whales are moving down. And I think those cancel each other out. If we go back historically to the we'll do last 2 years. So the pattern really started in late July, where Tether started to accumulate. Those whales have more buying power than they did, but it's still a fraction of what they were holding 2 years ago, back in late December, when they were holding almost 60% of all Tether, and now it's sitting at just about half of that, 29.5%. I would argue that the gold line is a little more important. The Bitcoin whales, when they're accumulating, prices generally follow. You can see here the opposite was happening back in early 2021, where they were accumulating all the way up until late October, but Tether buying power was moving down. We just talked about how if Tether and Bitcoin are moving down in unison, that very likely means that these whales are moving into US and world treasuries instead of waiting on the sidelines just in stable coins where they could prop back up the price at any given moment. So especially right here, this was a scary sign in April and May, and the price was really struggling because of the whales' lack of participation. And even though Bitcoin whales ever since August are continuing to dump, that's when we're at least starting to see a little bit of accumulation once again for Tether. And we can switch to USDC, and it looks much better here. So for as low as Tether has been, the USDC accumulation has been very evident since mid-February, and they now own. They recently surpassed the largest percentage they held in the past 2 years at 36%. And other than this, really, they're actually still well above the spike that they saw here in November 2020. So this actually looks pretty good, and is part of the reason that Bitcoin is still able to range, because the stablecoin whales, for USDC at least, are holding quite a bit on the sidelines compared to Tether. So that's the last on whales. Why don't we jump into some of the main metrics for we'll go with Bitcoin first, look into Doge, and then we'll take a few questions, maybe look into Ethereum briefly as well, since it's had a pretty decent breakout over the past week. But beginning with Bitcoin, check out what's going on with trading volume. It actually hit, just barely surpassing September 27th. It hit the largest amount of volume that we've seen in over 4 months, going back to mid-June here. So it got 2 days ago, it got 58.9 billion in Bitcoin volume, and that was pretty significant. It did coincide with a local top, so very likely the trading volume was picking up because people were starting to FOMO back in. Got very excited over Bitcoin being back above 20K, and since that time, it's actually dropped back down a little. But overall, if we're seeing trading volume start to pick up long term, that would be a very promising sign that things can continue. Looking at the last 2 years, yeah, we can see the trading volume is picking up over the last 4 months. Still not where we were back in January to May of 2021, but it's looking good there. And then meanwhile, if we go back to the last 6 months, the amount of daily active addresses for Bitcoin also hit over a 4-month high, getting back over 1 million addresses for the first time since early September. And there's only been a handful of days where we've seen over 1 million active addresses on the Bitcoin network. So that's a great sign. We can also see this spike right here in circulation. This was another 4-month high, 270K unique addresses circulating on the Bitcoin network. Very positive there. And you can see how prices were pumping going into that, and then local top hit. But this is a very small local top, and it could be the beginning of something larger. We'll just have to wait and see. The theme of these metrics here that I'm showing, we're seeing some good short and midterm signs, but still not good long-term signs because of the lack of whale accumulation. But we'll keep going here, because I think that this is what really hits the nail on the head. MVRV is displaying that the 30-day MVRV is actually positive now, just barely, at about plus 2.5%. So the average trading returns of active addresses over the past 30 days is in the positive now. Ideally, you want to see it negative, like right here. This is what implies like a big bounce could be coming, especially when the 30-day MVRV is below 15%. But it's still flat, and you can see there have been very few moments where it's gotten significantly high on the 30-day scale. Meanwhile, the 365-day MVRV is still very low here, sitting at negative 34%. So the long-term implication for Bitcoin's price still says that there's some catching up to do to bring the long-term traders back up to 0%, which is where MVRV rests. So the prospect for the long-term still looks good here for Bitcoin, but midterm it can go either way, because this mild rally that we've seen for Bitcoin has pushed profits of shorter-term traders back into the positives. Now, funding rate's also an interesting one. For Bitcoin, it hasn't been too exciting. We've seen a few spikes, like right here, where there's a lot of longs compared to shorts. And whenever that happens, you generally are going to see tops. This one was interesting. We actually saw a lot of people longing here and actually enjoying this small leg up, but eventually long liquidations formed, and all of these longs that stayed put, they started to go down quickly as prices started to fall. Same here, a lot of longs and euphoria. People decided, this very small run up was worth longing, and then they got surprised by another drop down. That's generally how things work. You can see the biggest short of the past week here happened on the 24th, and that's where the rise started to happen. And anyone who was still shorting right here got rewarded. So funding rate is looking pretty much flat at the moment. Really quickly, while we're on the subject of funding rate, we can see that over the past couple of days, There have been some signs of greed on the altcoin side, like on the 26th. This was right near the local top just a few hours later before prices dropped down. But for the most part, it's staying pretty flat and is about as flat as can be right now. So not a lot of greed or euphoria in terms of people putting their money where their mouth is. Whale transactions, let's go back to the last 6 months. Staying pretty flat at the moment. Not a lot of engagement, which lines up with what we saw with supply distribution. We did see one big spike in 100K plus transactions on the 26th. This is when we saw that volume, daily active address, and circulation spike. But for the most part, we're continuing to see whale transactions staying flat, if not moving down a bit. In terms of the key addresses and how many are being created in any given moment, we see one tier that's sticking out here, the 10,000 to 100,000 Bitcoin addresses. They were sitting at about 83, 84 6 months ago, and now it's up to 99. It did hit 100 just a couple days ago. That's a good sign. Even though 10,000 to 100,000 Bitcoin addresses, probably over half of those are on exchanges. It is still good to see that the larger addresses are growing here. That said, at the same time, the 100,000 to 1 million addresses, that moved back down to 4 again. You can see it's fluctuated between 4 and 5 over the past 6 months. The 1,000 to 10,000 Bitcoin addresses continue to go down, and the 100 to 1,000 has been going down since mid-September, late September, about the last 5 weeks or so. So it's kind of a mixed bag there. We already touched on the percentage of supply held by these Bitcoin addresses, and they're mostly going down. So that's something to be worried about. The ratio of on-chain transaction volume and profit to loss, not showing a ton of profit. If I draw the break-even line, it's going to be right here. So anything over that means there's more profit than loss transactions. Anything below means there's more loss than profit transactions. And we can see that this coincided with the local top for now. Generally, these high spikes are the times where you have to be worried that the price is about to top out. Way back here, way back here, back here. It's pretty reliable. And it's good to see that over the last couple of days, the ratio has been well under, meaning there are more loss transactions and people that are just saying, all right, it's, back over 20K, I'm going to cut my losses and just take my Bitcoin out here. So that's what we want to see. That means weak hands are sort of bowing out and transacting while at a loss versus these big profit spikes. So if we start to see a lot of these, that would be a good sign that prices can finally bounce and a rally can start to take place. Mean dollar invested age, not a lot happening. Dormant coins are continuing to collect dust and become older and older in those same wallets. Not what we want to see. We'd rather see mean dollar invested age start to move down. That would be the implication of another bull run beginning. Network realized profit loss, not a ton happening. Now check out this huge outflow that happened on the 26th. This is interesting. We've seen a series of these outflows over the past month, with one happening on the 30th, where a little over 34K of Bitcoin was moved off of exchanges. Another one here on October 17th with 41.7K. And the largest over the past 6 months at least, let me see about the last year actually. So second largest of the past year. Second largest. So that occurred on the 26th, right at that local top. 48.6K more Bitcoin were moved off exchanges than moved on to exchanges. That's significant, and it's pushed the exchange supply of Bitcoin down to 8.3%. And this is a good sign because it implies that there is less and less Bitcoin remaining on exchanges to continue to sell off. And when that's the case, we have to be happy about the limited ability for Bitcoin's price to be pushed down further. Now, the very largest spike happened back on January 31st, and we can see that when that happened, if I hold down Shift, price ended up jumping about 16% in the next 2 weeks. Doesn't mean that'll happen again, but overall, these outflow spikes, as you can see, they happen near bottoms more so than tops. 1, 2, 3, 4, 5, and now 6. I don't see any of these that actually occurred at local tops unless this one happened to be a top and price moves down. But odds are price is, at least in the short term, more likely to rise right here. Social dominance, another very important one, and we'll have an inside out about this one soon. Let me take off volume, only look at the percentage of discussions related to Bitcoin. So we like to look at 20% as the health line for the appropriate amount of discussion related to Bitcoin versus all other assets. And we've been well under that 20% line since late July, really. And while it's this far down, we have to be a little worried that the average trader is still too focused on pump and dump coins. Obviously, Dogecoin is taking away a lot of the social dominance now. Ethereum has been taking away some of the social dominance because it's been leading over Bitcoin for the past week. And while it's this low at just 10.5%, we have to be a little nervous because if we look at the last year, there have been there's only been, we're still looking. Yeah, this is the past year. Let me go to the last 2 years. When social dominance, get this back to 20% because the axis changed. When social dominance is well above, that's when you see prices begin to rise, especially right here. Well above 20%, a lot of eyes on Bitcoin, prices rose. When it's well below 20%, boom, prices crash because everyone is trying to find those altcoins that might show a short-term pump instead of focusing on the asset that really controls crypto prices in general and has the largest amount of trading pairs by far. You can see it briefly went up here above 20% again in June when everyone was talking about FOMC and how it relates to Bitcoin. Prices went up. And then when dominance started to go below, prices went back down again. And that's where we still sit. So even if we see these very short-term price rises, we have to keep in mind the average trader is not paying too much attention to Bitcoin. And ideally, we want them to. So watch dominance to see if it starts to pick up. But for now, it's staying low. And that's a caution flag, I should say, for crypto traders. We talked about weighted sentiment being back in the negative. Development activity looks as normal. We can take a look at the screener here to see if there's been anything that's been changing among the top developed assets in crypto. So we still see Polkadot and Kusama at the top over the last 30 days, over 500 notable GitHub submissions on its shared repository between Polkadot and Kusama. Cardano still in third after being mostly the top asset over the past year. Status has moved up to fourth. It was fifth, I think, just last week, but it's past Cosmos, Decentraland, Vega, Filecoin, Internet Computer, and then you see Ethereum here at number 10. It's consistently hovered anywhere between 5 and 12 or so over the past year from what I've seen. So great to see from Ethereum there. And then it's rounded out by Hedera, Elrond, Chainlink, Aptos, and Flow. Now, as promised, we can take a quick look at Dogecoin, and then we'll take one or two assets that you may request. We see that there's been a huge spike in trading volume going into the last year. The last time we saw this much trading volume looks like was in late April. So we're looking at about a 6-month high in volume right now. And keep in mind what happened last time we saw a big volume spike. Huge local top, and then prices fell off a cliff. Same here, huge local top, boom. Same here, big fall off. And even right here, this was the largest volume spike, and there was huge volume from it, a huge price drop just exactly 1 year ago. So generally, when you see a setup like this for Dogecoin, not good, especially with it being the speculative of all speculative assets, really, at least among the top 100. You've got to be careful when you see a sudden rush of FOMOers getting into it. Daily active address in circulation, not too much going on there, not nearly the same huge upticks that we see in volume. MVRV also very important. The 30-day average traders are up to plus 25%. The largest spike it got up to over the past year is plus 30% back in April. So it doesn't have much more room to run compared to historical evidence before a correction takes place. You can also see the 365-day MVRV is all the way back up to negative 4%. It hasn't been that high since November of last year. This was right when, you know, Bitcoin and Ethereum were hitting their all-time highs. So yeah, the long-term traders have kind of caught up. You can see that it actually goes off the axis. Yeah, it goes a little below negative 70% here in mid-June. So that would have been a sign that you could at least get into Dogecoin without a ton of worry that prices could go even lower. But for now, yeah, this is a big caution flag. It means that historically Dogecoin doesn't have much more room to run up, and a lot of the FOMO going on right now may be pretty unjustified. Looking at the funding rate, not a ton of longs actually, which is surprising. I would expect that there'd be a lot more of a long versus short spike. It is consistently seeing longs more than shorts over the past week. The last time it was really shorting was very briefly on the 21st and on the 13th. These did mark local bottoms the 2 times that happened. But when you're seeing a lot of longs like this, it generally means that there should be some long liquidation soon to silence the people who are getting overly optimistic about Doge. Whale transactions, as expected, they are up for Doge right now. This is the highest amount of 100,000 plus and $1 million plus transactions happening in about almost 2.5 months. And when that happened, that was when a local top occurred. This occurred at a local bottom. But for the most part, yeah, this is another sign that you should be wary of how far Doge can really pump right now when there's that many whale transactions that clearly are taking some profit on that little pump there. The amount of addresses, not really too relevant. I mean, Dogecoin is sitting at about 8.5 cents right now. So whales would be kind of right around here and here and here. Yeah, not really much to say. I mean, they're moving up a little bit over the past 10 days, but nothing significant. I wouldn't put too much credence in this. It's at least good to see we haven't seen any drop off like this yet. Interesting that the mean dollar invested age line has started to flatten out a little bit. So dormant tokens are moving. If we see a drop off like this would be a good thing. You can see that prices did move up from all of this dormant movement back in July. So if we see a big drop, that's great. It's at least tapering off, which is similar to what we saw right before a big dormant token movement. So watch mean dollar invested age over this next week very closely to see if it follows a similar pattern or if this is just a blip in the radar. And social dominance and volume, as you would expect, they have spiked. If we look at just dominance, it's up a little. It hit about 6%, but it's still nothing compared to what it saw in early September, and there wasn't even any pump going on back then. And then weighted sentiment. Here's the big one. The positive versus negative commentary for Doge. We haven't seen it up this high above regular standard deviation in the last 2 years. Let's go to the last 4. Yeah, this is the highest weighted social sentiment spike of all time, it appears, for Dogecoin, being 5.5 times above standard deviation. That's a big, big caution flag, folks, and something to be wary of when there's so much positivity toward this meme coin. You have to be worried that the rally that we've seen will come to an end sometime soon. And you can see that it definitely happened as a result of this price pump. It wasn't happening prior to it. And then development activity, as you would expect for Dogecoin. Look at the top left of my screen as I hover. There's almost no development activity going on. Now, it's interesting to see that between the 18th and the 24th, right before this rally, there was some development, not much, but at least 2 to 3 per day after seeing almost none typically. And it happened right before the rally. It could be coincidence, but I mean, overall development activity just shows whether there's really a team that's actively trying to innovate and improve. And that's really never been evident for Dogecoin. Even these small blips, it's just a very short-lived spike on the GitHub repository, and then it goes back to 0, 1, or 2 per day. So yeah, that's Dogecoin. Hope that was helpful for those of you interested in the very volatile price action going on for it. But why don't we take 1 or 2 asset requests now, and we can see if there's something we can find in some of your hot topics. Danny wants to check out wrapped Ethereum. We could definitely do that. Yeah, let's take a look. Danny's our sole chatter in our YouTube chat today, so thanks for all the commentary, Danny. So we'll look at wrapped Ethereum on ERC20 and see what's going on here. Trading volume is staying relatively low, but transaction volume is not. We are seeing a huge spike in the amount of dollar value of wrapped Ethereum. We saw 13.55 billion in dollar transaction volume back on the 26th. This was the largest since mid-June. There's a lot of 4.5-month highs going on right now across crypto, and wrapped Ethereum is no exception. So yeah, this one is seeing a pretty big spike that is indicative of some serious interest. It's not happening in tandem with trading volume, which is interesting. But let's see what other metrics are showing. Daily active addresses, a little bit of an uptick. Wrapped Ethereum has been seeing some increased address activity ever since mid-July, which has kind of matched what it was seeing earlier this year before we had this big dip from May to July. So staking wise, a lot less going on there temporarily, but it's heating up again now. As far as MVRV goes, it's sitting at about plus 6% for the short term and minus 14% for the long term. Neither are in the danger or opportunity zone now. But I can tell that the interest lies in this week-long spike where wrapped Ethereum has gone up about 17.5%. I would feel okay with a rally continuing up until it at least hits that 15% mark, which would be, you know, right around here or so. You can see that a local top, yellow flag was forming here back in July, and then price eventually dropped back down. So we just have to avoid that. Whale transactions, we have seen some serious whale engagement just in the past couple of days. Tell you what, why don't we take a look at some of the top transactions and see what's been going on? And I haven't done this for a while for wrapped Ethereum. So top transactions. Let's take a look at the largest value ones. So we've seen a huge grouping of, they're just dominated by top transactions that were occurring on October 25th. Yeah, over the last week. Okay, this is only showing 1 week. Let's zoom it out a little bit to like the last 3 months. We'll go since August 1st. Yeah, we'll take a look at liquidity next, LQTY. All right. So last 3 months. Okay, so actually the largest occurred way back in August, September. So none of the recent transactions on the whale side are related to recent top transactions that have happened since August. They've all been kind of run of the mill, because we can see the top transactions here are dominated by ones that were happening in mid-August. So nothing too special there, sadly. I wanted to try to find something exciting for you, but nothing too crazy. We do see that mean dollar invested age has had its share of dips, which is interesting, mainly back in mid-September, and it's kind of tapered out a little now, so that could be a good sign. But yeah, I don't see anything else that is too noteworthy for wrapped Ethereum. Thank you regardless for the suggestion though, Danny. Now finally, as promised, we'll take a look at LQTY. What's been going on with liquidity here? All right, let's take a look at the last 6 months. We did see a recent spike in on-chain transaction volume. This was the largest amount of transaction volume by liquidity terms over the past 6 months. Take a look. Let's really zoom out to the last 2 years. So yeah, this is definitely one of the largest over the last 2 years. We can see that if we zoom back in, it had actually occurred right near the local bottom. So this could have been an interesting sign of a potential breakout. Liquidities jumped all the way up to 85 cents over the, just as we speak. So this is a, just from like the spike here, going from the middle of it, price has gone up about 16.5% since. See what else we can find. Circulation spiked right around the same time. Not too much on daily active addresses. MVRV 30-day range has moved into the positive, sitting at about plus 6%. The long term is still very, very down at negative 49%. So unlike DOGE or even wrapped Ethereum, there's still a lot of room to run, because the average trading returns are so far down for liquidity. Even on this run up, it doesn't look like the average trading returns have moved up much, which is encouraging actually. It had really one big spike here, going from, God, yeah, that was quite a spike here. It jumped 42.5% almost overnight here on August 8th. But since August 8th, price is still down about 36% before this big jump just in the past day, going up 15% again. So liquidity's been pretty wild. And obviously the question to ask is whether this rally can continue or not. It doesn't look like it's getting whale transactions. This is a very good sign. It looks like a lot of the whale transactions occurred here on the 24th and 25th, where maybe they anticipated that a big spike could be coming, and they're collectively trying to push up the price. But we're not seeing any signs of profit taking or whales being content with this little run up. So it could very well continue. I don't see any resistance to it just yet. Price is sitting at about 85 cents. So Yeah, we're looking at the right tiers. It doesn't look like there's been some significant accumulation for 10,000 to 100,000 liquidity coin traders. They have been up. There's 47 versus 57 addresses compared to mid-September. So that's a nice 20% gain. Let's take a look at the percentage of supply held, though, regardless of how many addresses are on the network. 10,000 to 100,000, fairly even. 100,000 to a million, fairly even. Yeah, they're not really moving too much, but we're certainly not seeing any dumps. I mean, since September 1st, the 10,000 coin plus address here is interesting. They were holding 57% back at the beginning of September, and now they're up to 63.5%. So they've scooped up about 5.5% of the supply and added about 9.4% overall. That's a good sign. Overall, I mean, if we just merge the 10K plus coins, it's that they hold almost all of the supply, so it's going to be misleading. But I do like that the 10 million plus coins have been accumulating a lot. Whether they're mostly exchange addresses or not, I don't know. But that's the largest tier in liquidity, and they're holding more and more. So that's generally a good sign. A scary sign would be the fact that we're seeing way more profit taking than loss transactions. So it's not a lot of people who bought way back here who are now selling. It's a lot of people who've been buying this dip and now are selling in profit here for liquidity. So that's a concerning sign, because generally these profit taking spikes lead to drops in price. Not a lot of dormant coin movement at all for liquidity. Just checking to see while we're up here. Yeah, nothing significant. We saw a few 1 million coin plus transactions on the 25th, but the largest ones still occurred in early September or mid-October. Sentiment, not much. Dominance, these are very good signs. So not a lot of spikes at all for liquidity. The recent spike that we've just seen is being fairly ignored right now. Probably still a lot of eyes on Dogecoin and Shiba and stuff like that. So yeah, liquidity's sort of flying under the radar at the moment, and that's a good sign that this rally can last a little bit longer. Overall, to the person who asked about liquidity, I'm not seeing any signs that there is a major stop sign coming up for this rally, and it could very well continue. Other than the ratio of profit versus loss, that is a concerning sign, this right here. But as far as like mainstream discovery right now of liquidity, there isn't much stopping it from continuing to rise, and it could continue to do so until some FOMO comes in, and that would be the sign of a big halt all of a sudden. So thanks for that request on liquidity. I think we're pretty much at time now, but I appreciate the questions on wrapped Ethereum and liquidity. For those of you on Twitter, thanks for watching as well. It's always very helpful for you to hit that like button and make sure you're subscribed to Santiment. We really appreciate the support, and please continue to spread the word about what we're doing as we continue to grow and become a more household name in crypto here, especially going into the next bull run. We want to make sure that people feel they can rely on us for objective information. We're not going to gloss over anything and tell you that crypto is about to rise every weekend. Sometime every week when we have these calls, sometimes it's not so great news. Overall, Bitcoin and Ethereum aren't showing significant signs of a bull run being around the corner right now. If anything, this recent pop over the past week looks to be a little unfounded, according to a lot of our metrics. It doesn't mean things can't continue for another couple of weeks, but we really need to see those whales begin to accumulate and show some more enthusiasm of another bull run starting. So for now, be cautious over all of the price decoupling that's going on for a lot of altcoins when Bitcoin is still being largely ignored. But yeah, I hope this was helpful, guys. I appreciate you all, and looking forward to chatting with you again next week. We may have another guest, so be ready for that. And if you ever have suggestions on people who can join us for these calls, we're always open to hearing what you have in mind. So for now, on behalf of Max and the rest of the Santiment team, we wish you all a great weekend, and we'll talk to you soon.